Ladies and gentlemen, today we're going to look at the easiest setup for the new smart money traders, which is going to guarantee you a high probability return. And this is one of the first ones that I have ever learned with smart money. It's a lot easier to perform this, I'm going to be honest, in different parts of the world as time of day matters. And the time of day of this is not necessarily ideal for North American traders. And I think it's also not ideal for Australian traders, if I remember correctly. So, what is it? We're going to look at the chart right now. Boom. It is called the Asian Range London Open Manipulation. So we're going to look here. It happens very, very frequently. So the first thing we want to start off is, what is the Asian range? The Asian range is going to be a time. This is public information, by the way. It's going to be a time where Asia consolidates like this, right? Right before London Open, a little bit of a gap there. And then what we're looking to take advantage of is in here, we will get what's called a manipulation. And then here, throughout both sessions, we will get the distribution. Boom. Where price comes up, comes down, New York, and then comes down. It comes down in London and it comes down in New York. This is the model that I want you guys to learn. Boom. And then boom. There we go. This model, you can enter up here if you're sharp. And then you can enter right here if you are sharp as well. Now the goal is you enter and you TP, right? You expect this to be liquidity, and you TP on the lower side of Asia. That's it. This is a recurring phenomenon where you enter here. This is what's also called, famously, the turtle soup. So this is how a turtle soup looks. Boom, and then comes down. Let's look at this in real life. You can screenshot this, by the way. Sounds like some SpongeBob music. Boom, there we are. Beautiful. So we're going to look at this and say, what is going on here? Well, we have an expansion, internal raid, break of structure here. All right. Strong high, because it's, breaking the structure. What is this here? This is our liquidity inducement. Why is it an inducement? I can't tell you too much about it, but this is what caused this to come down on a higher time frame. So this is also this. You see what I mean? So what we're looking for is, okay, liquidity inducement. Boom. We have our liquidity grab. Technically, it's this high here. Liquidity grab, break of structure, boom. Liquidity inducement, bam. Order block, this is your origin here. And it's a lot easier said than done, right? But this is what you're looking for. Now, if we go to the 60-minute, I believe we're going to see the OB in a very simple manner. Yeah, we have our imbalance fill right here. See that? So this is your FVG. You just set the candle above of the fill of the FVG, and there you go. This is where you're going to be looking for some sort of reaction on the higher time frame. Now, if we go back down to the lower time frame, this is a 3-minute. We're now looking for something to happen here. We're going to go down to the M1 now. We react here. Boom. Liquidity grab. This is not where you enter, by the way. You can enter here. It's a little bit of a riskier trade. You can do something like this. If you have some balls, you can do something like this. Refine this. No, you can't refine that too much. If you have balls, you can do something like this, right? 4R. But it's not too refined, and I wouldn't do that personally. What I would do instead is wait for the break of structure. Boom, break. Break, price comes down. And this is our liquidity point down here. Oh, no, my bad. Well, yeah, technically, no, this is the liquidity point. This is the low that caused the high to be broken. So this is your break of structure. What you're looking for now is for an area where price should return into. There we go. What do we have here? The proper, remember what we learned just a few minutes ago? Imbalance fill candle. So you select the candle above. And then here is your entry. Hopefully you guys are learning something valuable here. That is your entry. And then you can target this low. You can target this low all the way down here. You have 9R. And if you understand your higher time frame bias, you can even target all the way down to these relative equal lows. Now I say that a lot, but I actually do it too. Now 19R is a little crazy. I would take major partials right here and just let a little bit of a runner come down all the way here. But this is how you would do it. This is how they do it. So that is the simple Asian range template for one scenario. I'm going to show you a few more where it happens very, very often, but sometimes it's ugly, sometimes it's not so ugly. Take the high of the Asia. Take the low of the Asia. Boom. Right? Then here we're going to go here. You can do it here as well. We got the raid. We have the internal, boom, internal breakup structure. What is this? Liquidity inducement. Raid. So this is where you enter. Above this inducement. Stops above the high. Target the low. 3R. Right? But you could hold it a little lower to this low. Because that's also a relative equal low, but there you go, 3.7R. And it happens very frequently, you know. There's some moments where it doesn't happen necessarily during, here. And that's something I want you guys to study. Why didn't it happen here and instead happened during here? Right, that's something I want you guys to know. But what you'll be looking for is basically this low. Oh no, well, I guess it'll be this one. This will be your lit. This will be your TP here. And what you're going to be looking for is some sort of entry down here on the M1. I guess it doesn't present itself very clean, huh? But that would be where you look for your trade. And lastly, we're going to look at one more example. These are a little bit cherry picked because I'm not going to lie, but there are some examples. Like this trade I took this trade, and I have proof on my Instagram if you guys go check the stories. That one I have, no, this one, this long one I took here, I have proof of it. So anyway, that's it. Asia range strategy. I hope you guys found this somewhat insightful. It's 10 minutes of me rambling and teaching you guys something very simple, but this is what you're going to look for: accumulation, manipulation, distribution. In the London Open, and within here, you're going to look for the pattern. There you go. So this is it. Hope you guys found it insightful, and I hope you leave a like and subscribe. Thank you very much.